Well, I think that if there was any doubt before, there should be no doubt now that we have completely divorced the economy from the stock and the bond markets. And, the Fed has been the principal agent of that obfuscation.
The problem is that it's a blunt instrument to a large degree. And while you'd love to make the stimulus, if you will, more effective or get it to the right people, we don't have a system of government that necessarily is at least can or is willing to do that.
The reality is that we do have a system, and you don't have to pick who the quote unquote right people are. The right people is every citizen of the United States. And I've said this before, but this is a point in time where direct fiscal stimulus should be going to the hands of US taxpayers. It is the most effective way to blunt this unnecessarily rampant asset inflation in the markets and at least balance it with incentives in the hands of consumers to buy things. And if you don't break this cycle and teach a new pattern of behavior, we're going to be looking at a Japanese-style deflationary period where we'll have 10 years of unemployment, the economy will just be stagnant, and we'll wonder why equity markets keep going to all-time highs when it doesn't actually map to what you see in the real world on a day-to-day basis.
Kudos to that Squawk Box anchor for having him back on. If you guys remember, that legendary guy, his name is Shamath Palihapitiya. I hope I didn't butcher that. He has been on that show before. Back some weeks ago, he talked about how the government should let bloated businesses fail and have stimulus payments just go purely directly to Americans as opposed to propping up organizations like Boeing or big bloated corporations that don't contribute to the public good. And the anchor was flummoxed. He could not comprehend it. So good for him for having him back on, because he obviously does not agree with his point of view. But I love that this populist message is getting out there, that the stock market is basically at this point a casino for rich people and does not have any bearing, pretty much little to no bearing, on the realities of everyday Americans. I mean, millennials are like, oh, I see the big line go up, I see the big line go down, because they are just not invested in the stock market in the way that other generations were. Because millennials, we saw the Great Recession, we saw everything that happened there, and it just seems too volatile and divorced from our daily economic lives. Which is why it's truly my number one pet peeve in political discourse when the stock market is discussed as the ultimate indicator of economic health, when it's like the 20th. Unemployment, obviously, I think should be the one that's discussed first, and underemployment is under-discussed. And it's great to see this kind of CEO, I think he's a billionaire, talking so frankly about the government's failure in their response to this crisis and the Fed's failure in the way that they've been pumping out money to these large corporations as opposed to it actually making a significant impact on human beings. Palihapitiya criticized recent stimulus policies and said the stimulus should be going directly to taxpayers and consumers, who will then spend that money and help energize the economy from the bottom up. Instead, the current stimulus measures only inflate asset prices, and that doesn't do anything to fix the economy. It's a very similar argument when you're talking about how ineffective trickle-down is. And the numbers just prove his point. More Americans lost their jobs last month than during the entire financial crisis from 2007 to 2009, or during any downturn in the past 80 years. Back in February and early March, as the pandemic ravaged one industry after another, the stock market plunged by a third in 5 weeks. And yet, since bottoming in mid-March, the stock market has risen steadily. Now, 6 weeks later, it has recovered about 2/3 of its losses and is not far behind its all-time high. Okay, argue that that's because they're predicting growth. There's no way to predict growth right now. There's no way to predict anything. We are in an unprecedented time where we don't know what tomorrow's going to look like, let alone 6 months. So again, we are talking about a major, large casino for rich people. And the fact that that casino was prioritized over getting cash in the hands of everyday Americans to actually stimulate the economy in a tangible way, in an actual way. If you care about economic health, It's clear. It's clear what needed to be done. But a reminder that Republicans specifically, and many corporate Democrats, don't care about overall economic health. They care about appeasing their donors who wanted that cash. And look, regular people, your waiter down the block, he's not donating, he's not bankrolling your campaign. So UBI, direct payments during this crisis, let's make that a little bit less of a priority.